Hey everyone, welcome to July 23rd, 2026 Principal Profit Trader Coaching Call. Like I mentioned earlier in this week, we were at a very critical junction here because Bitcoin is at a crossroads, right? We knew that as it was coming up into this major horizontal resistance zone, which spans all the way back from February 4th of 26, in confluence with this key swing high, that we were creating potentially a pattern of a balance. That if we failed here at this, we failed to make a higher high here. We closed here with a bullish engulfing candlestick pattern in the sense it was a breakout candle. We did form a higher close, but we did not form a higher high. This tail was higher, and then the day after, we shorted the double top, and it kind of pulled back, and then we've been kind of pulling back since. And what we didn't want to happen for the bulls, if we were going to actually get a test up of this purple trend line and this 100 moving average, was that we didn't want to go back underneath both the horizontal, the potential trading range, and this trend line here, which represents a bear flag. Okay. We had been going up in here. We had a shoulder, a head, and another shoulder. That's an inverse head and shoulder that could potentially have broken us out up into here. We knew it had good odds, like I said, of getting to 67, which I told you guys ahead of time that week I was going to initiate a short, which we did. We planned this out ahead of time. As it was coming up, we noticed that there was a bearish divergence for the last week or so on the MACD. We also noticed a bullish divergence for the last couple of weeks here on the RSI. A bearish divergence, I'm sorry, on the RSI stochastic, relative strength index. And while we didn't get a bearish divergence on the CCI, we did get this overshoot as we came up here and what seemed like a bear flag and a bull flag breakout confluence up into major resistance. At that time, there was a hook from extremes here, which was one of the reasons that I gave it a short signal, as well as we were coming up into it, the MACD was making a bearish divergence. And as we were coming up into it, the RSI was then testing this trend line here, which then started to roll over once we confirmed down. Now that the orange is over blue, it's sort of confirming now that we could be going into a downtrend mode. It could fail here and produce a huge crash. At the same time, right, we are in this rising wedge channel here. Right, which could, we're in this rising wedge channel, which we could come back here and sort of hold at the 20 moving average, see how the 50's underneath it, and then come back up here and test the apex. That's that double top scenario into this zone, which I've pre-wrote in the channel, which could happen. It could happen if we get some type of a candlestick pattern of a buying tail. Maybe the next day we get it. But if we get some type of zero line reject like we got here and here, this was a weaker one, but it still held. And some type of reversal on maybe these, but even this, if we get some type of overshoot of this turbo and the CCI stays above the purple zero line, that could be enough to have a retest for a double top or a potential overshoot of that. But I do not think it's going to get higher than 6970K max. That's when you have the confluence of the 100 rolling over, which holds during a bear market as well. And you have this trend line here, which is very key, touch point of the all-time high, and that key double top at the 200. And now we'd be going back up into it around that 69 area, 70K confluence. Now, it might not even get there. We have, like I said, the RSI on the daily and the MACD are both weak. It was enough for me to say, okay, I'm going to take a short on first test. If I'm wrong, I have a stop loss. There was enough of an edge there for a trade location for take a quad exit trade, which we'll go on the 60 real quick before we go out to the weekly. We'll show you where we took that. That was the last signal we took. On this day, it was a winner. We took 75% off. We let this runner get stopped out. Our next trade was this double top into this major resistance zone with the confluence of the trend line, which we now are 75% off. And once again, have a runner. And like, it could either go up here and stop us out, or we could bounce here around here and step out or go to this zone. I don't know what's going to happen. All I know is that I got my 75% scalp where I'm okay with getting some profits out of this. I don't know if this thing's going to run or not, or when it's going to run, or if we'll hold or go up here. We need to break, obviously, this trend line to get some type of a move down. But whether it breaks now or goes up to 70K, which we've shown, or 69, which I don't really have a great zone here for that, but you can see it on the daily. It's going to be another failed rally in a bear market, right? Which could then produce a violent leg down. Now, if you take that into consideration with this potential Michael Saylor thing going on, we could have a black swan FTX type of a combo here that could really take us down. So our trade location on these types of setups, both these setups were based on trade location, right? Notice that, hang on a second. You see on this day, we didn't short against the trend on this day, and even into the next day, right? We shorted, at least on this day, when we had the false breakout, when we started to go sideways underneath it, and we faded a double top intraday here. We can go on the 1 hour and see this a little better. Right, but then when we bounced off the trend line and then we started to trend up, right? We weren't interested in taking a short, even though it held here, here, or even here, until we got to the confluence of a new horizontal and then now the new directional. Because when you have a confluence of horizontal and directional, I mean, we need more edges. You can't just fade every zone. You got to look at how the price is getting there. What's the rotation? We're obviously in this channeled uptrend once we had the double bottom, which was very wide, off this major support zone, which got to around 57. Now, I didn't quite get to my target of 55 minimum for that at the 300 green moving average on the weekly. I should have adjusted once I saw that this held, and then we came back and formed a double bottom. But at the very least, if you remember, I took a lot of these arrows off. I had tons of blue arrows all the way down on this. What you won't see is a bunch of blue arrows fading against a trend. Now I didn't. Now, granted, I didn't put a green arrow, green arrow, green arrow. I'm not saying I maybe had one long for a tiny move. I didn't rotate my bias quick enough, but I also didn't fade against it, so that's good. And you notice that we didn't short really until we got up to good trade location, kind of near these major zones. And this one obviously had this false breakout. We had the intraday double top, right? This one was into the overnight session where it just once you have a trend day, are we really going to have another trend? It's like very low odds to have two trend days in a row, and we were retesting this directional trend line with the bottom middle to the back of initial resistance. You have a little stop a little bit beyond here. You're within your 1.5 to 1% risk. So that was that trade. Of course, I had to stop to break even now because I have no idea whether this thing's going to hold now or keep going. Like I said, I'm holding a runner for the potential that this is the end of the counter trend rally, but I don't know exactly if it is or not. So I'm willing to just have that runner get stopped at a break even, and then the scalp of the 75% is enough, and at least we made money on some move down. Okay, another reason that it gave me confidence to take that trade is because if you notice on the weekly, on the higher time frame, as we go up, we weight these things a little more. The immediate momentum was that we were going to have some type of at least a bounce down on first test because we have a very pronounced, or at least a very well pronounced, not an extreme one like this one, but kind of getting close to that. It's getting close to that. Inverse zero line reject, which we know is a reversal setup. And this, when I say reversal of the counter trend up move, so it'd be like a trend down continuation setup. What's not giving me as much confidence that it's the final, that we're in the finals is because, when we shorted here, we were testing this major multi-year on the RSI relative strength divergence indicator. Trend line here, right? Which marks a reversal in momentum. Perfectly then in confluence with this major purple trend line here, which was second test. And then now with this pink dotted line, which is our Ichimoto cloud, which in past bear markets, if you hold below it, it's a bear. If you break and hold above it, it's a bull. That was testing in a very important zone. So We have the 100 and the 50 crossing. We noticed that when the 100 and the 50 crossed here, when the slow got above the fast, uh, around here, we certainly had another leg down and then another leg down. And, we're talking a move from around 22 high down to 15 or so and some time. So that definitely marks another low. And you can see this was an important support zone from a trend line perspective because we held there, at least the body held there, not the overshoot, but that's okay. We can connect another one from here to here for a more extended one. Then we hit here, and then of course the double bottom hits again here, and beautifully, what a coincidence. That should have been an entry for me, and that should have been an entry, and that should have been an entry. I saw those, just got nervous. I did take these entries, I gotta say, for that counter trend. Shorting it, I have been doing, but I'm just saying. Getting better, right? We got to just improve our execution and not get so nervous about things. Here's another double bottom, perfectionist syndrome. It did get here. Once it gets here and we have a trend line confluence again, I will then be initiating what I think will be a larger wave two. I mean, we're in a wave two here, but that implies that it fails, and now we go down for that fourth leg correction, right? Because we've had one, two, three, and now we're going to have our fourth. And here, if you look at it, you have that A, B, C, and now we'll get that one, two, three, fourth leg down. I think there's going to be a 5-leg correction. And then that could potentially take us to our targets of around 40 to 35,000. I have it squeezed here at 43. I think obviously you could overshoot as well. We have to see the orange then turn back over blue and then just go sideways for a while, which it has done in previous markets, bear markets, energy that we've recently had. It was only recently back up into this bullish zone once this had a pretty strong counter trend rally. This could be a more feeble rally. It could resemble something like this, or even weaker. It doesn't have to be as strong as this, and then we're going down again. Now, if we go over here, right, we definitely have that inverse zero line reject, and then we have that selling tail candlestick pattern, and then the breakdown. That could happen, and then we get that test into the 55, low 50s, potentially 48 overshoot area that I have marked. But if that thesis around the 37 mark doesn't hold true and we break this trend line here, which I've marked, then it brings into this major trend line here, which then brings in the 25 area. And if I extend that, believe it or not, even between 25 and 15,000. Right. That's if I extend these to the pink line, and I will do that if need be. Now, that's if this trend continues. Now, I know it sounds crazy, but just go back to every single bear market and just figure out the percent from the highs to the lows, and it's close to 80 to 90% every single time. So if it just follows that basic premise, I'm not saying it will this time, but why would you bet against it? It would go down towards that 25 to 15,000 zone. The contracted area would be if it follows that trend line around the 36. See how it would hit around 36,000 to just below 35 to high $30,000 at the apex of the purple and the yellow, right? And that's when there could be a larger move. If we see this break into the fourth quarter, very much load up on the bottom of that second yellow trend line here, because that's when there could be incredible entries. Like I know this might not be this part of the market, which typically this lasts a year and then this lasts 3 years, but all the money is doing this part correctly and then getting the low, right? What type of trader would I be if I told you to DCA here, DCA here, and DCA here? And now you've just tripled down and you have a losing portfolio right now. We want to find the final dip. We don't want to buy the dip that keeps dipping. Okay, that's what we haven't been doing. So based on this inverse zero line reject, the fact that this 20 moving average is also holding below it, it also offers a short opportunity. Now going up to it would bring us to that 70K area, which I don't think it's going to break the 20 moving average. You see we have the back testing of the pink trend line, which is multiple years. Like I said, it goes all the way back to multiple previous cycles. We're talking 2018. That's 8 years ago. So that's in a very, and now we broke it and we're going back up into it. And that area where the yellow trend line, which is the 20, which typically look in previous, all acts as entry points until when we break it and then hold above it. Right? A previous bear market, every single yellow trend line, that's the 20, one until we broke it and move above it. And also confirming that would be breaking and holding above the pink dotted line Ichimoku cloud, right? Holding above the Ichimoku cloud, right? Until when? Until when we break it and we go back up and test it, it acts as resistance, and now we're holding below it. Look, holds above, overshoots a little bit beauty principle style, but then the 50. Because the 50, this blue one, is the ones that we're going to use for entries in the bull market. We're going to bam, right? Bam, bam, right? And we're going to, nothing moves straight up. There's no reason you got to hold all the way here because based on our leg count, you know what I mean? We can get in again for reloads. We'll take profit at double. Like, why would you hold through this when it's making a wide double top near the all-time highs, right? You have to be patient. Maybe you have an entry here, then you take profits again here. Then there's another. Anytime there's an entry at the 50, you would get in, right? Until when we break it with conviction, then we go back up. That was that awesome entry I gave around 98,000. We broke below the 50. That became a false breakout. And that marked the confirmation of the end of the bear market because once we made a lower low past this swing low, then it was confirmed. We did do that. Now, this was the counter trend I did take. I think once this happened and I didn't fade this double bottom, there was like this panic set in my body, like, oh my God. So that anytime we came back down, and did it again, I didn't take the counter trend after that, this one here, which doesn't really make sense because after you go down 30%, you're going to get some type of a move. Now we went down another 20 something percent here. And then we had a double bottom and then we could expect at least a slight move here, but I don't think that's the big counter trend that will happen that will eventually fail as well. I think this one's either going to fail now or fail a little bit higher. Then we're going to get a move down into 55 near my green trend line, green moving average of 300 like we did in the previous cycles. And it could be something like this where we get that first move up into it and then we take profits. Or you wait for the double bottom. Either way, it's a high odds trade. We want high odds. Action, reaction, quick in the money trades. Then we broke around it, right? Then we held. This has been the key trend line until it was broken. Now it's going to act as key resistance. And like I said, we are still not into the fourth quarter. If this was the final low, it would mark the lowest level we've ever had at around only 58% to 56% down. We are not anywhere near 80 to 90 or even 75, okay? In a contracted thesis. And we're not, the 4 year thesis is still intact. It's never been violated. Why would you bet against it? It's the Bitcoin time cycle, which we developed a PPT based on our weekly principles. That has yet to fail. That inflection point also in confluence with the 4 year cycle suggests the fourth quarter, precisely the week of December 7th, 2026. I'm not saying it after the fact. I am telling you months ahead of time, just like we did in 2022 when Kobe called the all-time lows at 15,000 when he said in November 2022, there's going to be a signal in the first week of January 2023. Then he doubled down in the first week of January, or rather it was the second week of January 2023. The alert was in November 2022. He says also in confluence with that Bitcoin time cycle decode of 30-week for each code. For each cycle, there is this pattern of very larger time frames where markets move in a series of they go sideways, and they go up, and they go sideways, then they go down, then they go sideways, and they go up. So the up phase of this sideways phase after a huge down phase was also in confluence with the Bitcoin time cycle chart of the first week of January, precisely January 10th. And that was like the final day. So we not only got you the right level of the final low, we got you the time aspect so your capital wasn't tied up as well. I mean, it might be something that we get such a violent crash with some type of a flash black swan that the level is amazing that you get, but maybe there's a double or triple bottom that you don't mind sitting through until December. But just know you can, because that's what the time cycle predicts. Or maybe it starts to actually trend up then, and then the double bottom or triple bottom happens before. I don't know how this is going to happen. No one knows the future. Just looking at probabilities here. Okay. So yeah, there is this inverse zero line reject on the CCI here, which is the immediate effect. Like I said, blue is still over orange. It's still upturning. But like I said, it upturned here. after a big move down, and then it kind of peaked and then went down again into a deeper level. So this isn't even really an oversold, as extreme as it should be, level like it could be. So there's that to look out for. And like I mentioned before, just to look at the last bear market, when we were getting near the actual golden pocket area, we had very strong liquidation levels marked by these three check marks here. Let's just get rid of this. Right? You can see this level here. We haven't, it's starting to show some signs. Here's a good move, but that's not near any of these peaks here. So we haven't seen that super exhausted sell-off marked by that FTX kind of thing that usually marks the end of a bear market when it's just even the bulls are like, okay, it's over, Bitcoin's dead. This thing's, they're still hoping in the market. So that means they're going to be wrong. But when they start to say that it's dead, that's when we'll be on the next level or two down and be able to buy it. So I think we're approaching the golden pocket. Like I said, if we go out to the monthly, and we go to this index, right? We go to this index. I mean, just one thing to look at. Like I said, I marked here and here. Ooh, 1, 2, 3, 4, 5, 6, 7, 8, 9. That was the right. That's the extreme. 9 red candles down when this was making a dynamic double bottom with an overshoot, while the CCI was making a bullish divergence. And while this now was in the oversold territory for a while, time spent. You see how the time spent isn't quite there yet? We don't have to wait for, right? That's when we're going to buy. We'll sit sideways through that when we get to that 9th red candle. Okay. What confirms it, if you really want to wait for confirmation, which also as from an investment perspective, if it's too scary for you, you could wait for confirmation just from an investment perspective. I'm not saying you should, but what would confirm it would be a bullish engulfing candlestick pattern, which took out the previous month, the lower low of the close, and this, it also took out like this month and that month and that month. It just happened to. Now, if we go back to the previous, this is the previous bear market. We're going to go to, we're in a bear market now. We just looked at the previous one, but let's look at the one even before that one. This is in 2018. Okay. We had a double top. Then we had 1, 2, 3, 4, 5, 6, 7, 8, 9. Hang on a second. Right here. 1, 2, 3, 4, 5, 6, 7, 8, 9. Perfect. Okay. 9 red candles. Then we had that wick. That was the low of this month. Then we went sideways again, right? Low of this month. Then we hit a sideways day. That's the pause day. Then what did we have? We had a bullish engulfing candlestick pattern. What did we have this time? The previous one? We had a bullish engulfing candlestick pattern. Or at least this close and this is a little bit lower. It took this out. Then, of course, we got the confirmed breakout here, just like this strong move that we had quicker here. Anytime we have that, that's a great entry. 9 candles down. Also, this had a time factor of going sideways for a while. Also, we went from, 60, 69, 68 down to 15. That's a lot more than half. Half would be around 35 or so. at 34. That went down another 50%. That's what the market says. I mean, this is market's predicting another crash down of 50%. 50% of 65 from here is 32.5. So that's where we're headed. And I think it's going to go, it could, possibly even go lower, but I have it marked between like 32.5, like I said, and 37.5, the bottom of this. And we're at currently 1, 2, 3, 4, 5, 6, 7 red candles. This will be green this month. We'll probably have a slight down move maybe here. Then we'll have the breakdown 9, green month, another red one, and then it'll go sideways. But the low might be red. I'm not saying we can't have red candles after it, but the low there was there, just like that. It had the ultimate low, then the pause month, which was still red. This one had the ultimate low and then the pause month, which still meant the little pause screen, and then the breakout and the breakout. But the bullish engulfing seems to mark it. We'll mark it. We'll get it without waiting for confirmation. We're not going to get this dip because I think odds are that, like I said, I just laid out the case why I think it's going to go lower. Like I said, I've added that Ichimoto cloud as well, which confirms it on the weekly. That's this pink dotted line. In fact, I'll just clone this, copy it, and I will go. Let me just go towards see what this cup and handle one is. So, like I said, this is a good chart because it does show this inverse cup and handle, which I've honored in a slight overshoot, and I'm even willing to overshoot that it goes up a little more. But I had to honor this thing, this swing high with this level of resistance here, because this inverse head and shoulders is smaller in size visually than this inverse cup and handle. Okay. This inverse head and shoulders, because the head and shoulders is usually upright, someone standing up, which is a bullish pattern, is smaller in size than this inverse cup and handle, which is a bearish pattern. That's why I said the net result of it, if you just, all things being equal, if we just look at pattern versus pattern, it's going down from here. And I drew this way ahead of time, and you can see it's already starting to go down from here. We certainly don't want, it's closing pretty heavy. We don't want this is a piercing reversal pattern. I mean, it's not an engulfing as much as this was, but this is still pretty bearish. It's 4:41. We have like 3 hours and 19 minutes left in the market before the next candle's open. It's pulling back to 65,118. That's the volume weighted average price, or the VWAP, or the orange dots, which shows an averaging out of outliers to get a streamline of a trending price action. And odds are, because it's been a downtrending day, that the low of the day will close 90% of the time towards the low of the day in the last few hours. So that means that we'll probably have sellers step in at the VWAP here and bring it down to maybe 64.4 or 64,000 by the end of the day is my prediction. I'm not saying this was a good entry for a short. Like I said, I think the lower odds trade was when I faded into the major resistance, and now we're just have a runner in and we see what happens. Very low risk on this. Like I said, it could easily bounce around up here, go back and have a double top again, possibly getting up to the yellow moving 20 average on the weekly, which would be an automatic short for me. I'm just saying it for my NLP, neuro linguistic programming, and for anyone listening who wants to shadow me, because I'm giving money making ideas here. There's no doubt about it. If you have a sizable portfolio and you've been listening to me, and I've been saving you from buying into every freaking dip or every breakout here on this bear market, and I got you out at the right time as well, then this PPT thing is all worth it and then some. Even if you're a short-term trader, maybe you're learning some of my entry techniques, which I've been giving out. So we'll see. So this pattern versus pattern is helpful. Now let's just, because it's a clear chart, let's add the Ichimoku cloud here. And just so if anyone wants to shadow me, it's the Ichimoku cloud. I've gotten rid of the conversion line, lagging span, and even some of the upper and lower line. I only want to look at the baseline, okay? The reason why I only want to look at the baseline is that the baseline is to the Ichimoku cloud what the meridian line is to the Gaussian channel, meaning they're dividers between bull and bear markets. Okay, I don't want to see anything else. I'm not using it for anything else other than helping me confirm something. This doesn't make any sense though. What the heck? It shouldn't be into that yet. Why is it? This doesn't make any. It's just the week. Hang on a second. Oh, because this is the daily. Let's go to the. I was gonna say I was freaking out. It didn't make any sense. I was like, we're not there yet. That doesn't make any sense. It was already penetrated. I was like, okay, yeah. This is good. It's not. By the time this would be close enough to hit this, it would be rolling over a little bit more. But the idea is that it's at 74,000. If we break this and hold it, that's can signify the end of the bear market for real. I mean, that's the real technical level up here, this 98,000. But who wants to wait for that? Now, if we look at this weekly chart as an index in time now, let's get rid of this. Look how clear this is, right? The Ikimoku cloud, once broken, what a beautiful. If you didn't want to even try to find this bottom, so this just wait for it to break by as it's breaking somewhere up here, test it, whatever, and it just holds the whole time. When we break it with conviction, that's when you're getting out. And then, obviously there was a triple top here, and you could do leg count, and then the RSI was diverging. You should have got out here. For real. I mean, I did pull out some there, but I didn't pull out enough. That's for damn sure because I listened to other people. Kind of got it. It was breaking out down here, got out, then got in again here brilliantly, then swung trade this up here on the counter trend, got out again for everybody, told everybody to, and I've been out of the portfolio since. I did miss this counter trend and this one, which pisses me off. But I did have been shorting on my day trading account, my swinging income producing accounts, so that's good. The shorting has been easy on the future. So just showing you exactly how this works here, right? If we're above it, bull market, breaking and holding below it, bear market, breaking and holding below it, bear market, right? Just look how this is, right? A little bit higher, and break, right? Tries to go up to the cloud, and a little bit higher, and a little bit higher, and break. Guys, he does go up to the cloud a little bit over, breaks down below. Breaks down below, back up into the cloud, breaks down below, back up into the cloud, violent leg down. So it's like one here up, and then two down. And I think this here is here in process, and we're gonna have another huge move down, right? Because it's like, well, let's just draw it out. One, and then two, and then three, and then four, and then five. And we're in the process of, up here. So one, go back, two, three, Yeah, so I mean, how I see it is that made a slight higher high, broke through it, one leg, two leg, three leg, and then you had this big fourth leg down with this minor pullback. One, two, three, a little bit of leg pullback, and then we're gonna have another big leg down. Let's see if I did that right. One, two, yeah, three. I'm sorry, I shouldn't have counted this as two. That's what I think. That's where I think we're at. You know, that we're in something like this. We broke below this. We're kind of making a thing, and then we're gonna have another violent leg down because we are holding below the Ikimoku cloud. We have broken below it, just like the meridian line on the Gaussian channel. Notice that once we did get enough of a separation from it, it needs to go sideways and then roll over. It hasn't really, in my opinion, gone far enough away from it. Because this went from 68 down into 32. See, it took a huge, this went from 120 down to 60. So it's like from here to here was their half off point, and from here to here is like the half off point, right? And it's like, is the half off point the end? No, it went up and then had another leg down. So like this could be the process of right here, of the biggest leg down. And I'm not, that'd be like telling you to buy here, not here or here or here or here or here, or wait for the golden cross. So your money's not tied up for a huge amount of time here, like half a year or more. And then boom, that's what we're going to do. Now we can go back in time and look how this has played out as well as we had before. You know, this is 2018. Once again, once we had the double top, we broke below. It held for the entirety of the bull run, broke below the pink Himoku cloud on the weekly, and then yeah, right. Once we held right, tried to act as resistance here, and then broke out, broke down to the downside. Only when we had a bullish engulfing candle and broke above it did we get confirmation that there was going to be a bull market. And yet, still, you had to deal with this in 2020 COVID anomaly, which then once we broke above it, held for the bull run. Same thing happened here. We had to have bullshit golfing to break above it. We are still quite a bit below it, guys, and it would have to go all the way up here and break above it. And I just don't think that we're there yet. This would be the ugliest reversal ever. Maybe I'm wrong. Who knows? But timing wise, I just don't think it's happening yet. And we can go back and look at the timing reason why as well here. And that would bring us here. This would be around December 7th, the going into the second week of December. We're talking the end of the fourth quarter of a 2027 bull market. Of course, it's not going to start before then. It's just not. I mean, this thing is going to have to play out. We don't see volume coming in yet. There's an inverse zero line reject on the CCI. You can see how well this time cycle, which we call ahead of time, has worked out. Look, perfectly. I mean, I was talking about this date of May 11th for the longest time. And look how well it called this false rally here, this counter trend breakout. And we shorted that. We didn't use this at the time, but look how well this Ikimoku cloud also acts in confluence as resistance on first test. I love how simple this can be once you see these patterns. Because, you know, like I said, nothing is perfect. Once we broke the 20, then the 20 becomes, I'm sorry, once we broke the 50, then the 20 becomes the resistance point where you can short it. But we did look at this. We did overshoot it here. Then the Ikimoku cloud comes into play. Now it will be resistance again. It held here perfectly. Couldn't even get to the 20. This time we overshot it. Might be in something in between now. What would confirm the down move is that if this starts to reverse, we still haven't seen this reverse yet. But what's predicted the trouble of the slight tail here, and like I said, it's looking pretty bearish on this candlestick pattern. But this is not Sunday night with this type of a close. This is Thursday coaching call live. But what did show in the more immediate term, like today, this inverse, at least the part of the week, this inverse zero line reject that slows it down. This is more of a longer term momentum reversal, and this obviously is even farther out because we need to hit this trend line. Of course, it could fail right here, but I don't know what it's going to do. If you look at this horizontal resistance here, kind of coming up into the bottom of these, but yeah, this would be the real green star area to look for. So we're just not there yet. You know, we got to be patient because it can come down right to this level, and we're talking, you know, either a more powerful counter trend rally from 49 to 55 that goes up into a stronger move, potentially into this trend line here. Which we'll show you here. This purple one here, but it's just an awesome area of confluence here, guys. This whole area, if we even get there, we'd have to break 69, and then we'd have to get up to 74. Breaking 74, and then of course we'd have to have the 50 here. This is all rolling over for another leg down. That's what the odds are saying. What can I say? I don't even really look at a lot of these altcoins anymore, like Polkadot, Private Coin, and all this. You know, I don't know if any of these projects will recover, but I do know that we can take the truth of principles and just see how well they've applied. I mean, anomalies have happened. We did not have an alt season this bull run, okay, but we certainly did have a bull run. Now, just keep in mind that anomalous events are more likely to happen in riskier beta-driven markets than in more established markets. And altcoins are a more risky venture than Bitcoin, right? That's a fact. Bitcoin, obviously, more risky than stocks, S&P 500 mutual fund or something like this. You know, we live in an artificial economy where these things just go up and up and up, but even then, they don't always do that. We can take a look at the S&P because if we get that S&P sell-off, which we've been talking about all week, is a diamond pattern here, warning you to potentially sell before this little crash here, because this crash could turn into something extremely major, a move back into this major trend line, or worse, because we're so extended up. I mean, we haven't had a bear market in this market in a long time. We had a new Fed chairman come in who became hawkish, not dovish. There is a renewing of war between the United States and Iran over the Strait of Hormuz, and so on and so forth. So there's all these geopolitical things that are affecting what we're seeing now in the markets, and we could couple that with a black swan event from Michael Saylor's very risky, over-leveraged company of insistent Bitcoin buying, because the man who said never buy Bitcoin, the man who said never sell your Bitcoin has sold some of his Bitcoin to pay off his dividend obligations. Aside from all the gossip and hearsay, right? We were on the alert of a potential selling issue of a topping tail, because the S&P is seriously driven up from over standard deviation of the mean. We've talked about the 100% range principle, which gets us right up to the top of the topping tail, the topping pattern, diamond tail. We moved 100% of this range, which we broke from multiple years. We've had a nice run up, first test of the VPOC, then down. We've gone back up into the range. And now we have a topping pattern called a diamond pattern, bigger picture pattern, in, more importantly, the right trade location. You see, this diamond topping pattern is not occurring, let's say, after we've pulled back here and it's deciding something around here, whether this trend line or hold or whether that or hold. Either one would have been fine from an investment perspective. Excuse me. This diamond pattern is occurring near the top of the range in confluence with 100% of the range it broke from. So it's at this topping pattern is that correct trade location, is what I'm getting at. And I'm not surprised that we've had a breakdown. Now we'll see. We can get to the 100, we can get to the 200, and we can get to this VPOC in confluence with this multi-year trend line because, markets, even the S&P, one of the most inflated artificial economies, in the world that has nothing to do with what's really going on in the physical world that real people have to deal with, but it's just a gambling casino of what people's perception of throwing inflated currencies into, stock markets. So the S&P, is a broad scope of that. We can narrow it down a bit. We can look at what the Russell's doing, right? The 50 also has a critical spot there. And then, of course, the NQ, a little bit broader. And also not looking great. Like I said, it's at a critical juncture, but ES definitely with the diamond pattern, that hanging man there looking very bearish right now. I mean, this thing could really get going down. So hopefully you've protected your assets because while anything can happen, is the reward to the upside worth the risk to the downside? Like, where is the risk? The risk is much higher than the reward here. Exiting right now and sidelining and letting things clarify, I think, is the best opinion. And you really shouldn't ignore these bearish signs. Really shouldn't. Now, if we go to the weekly and we look at where the RSI is for the S&P, see how I am using on the daily that diamond pattern to predict a breakdown towards the standard deviation of the Ikimoto cloud. And I'm predicting that it's going down, but look how the RSI is confirming the move out of the diamond pattern. It's not going against it. You see the orange is over the blue. That's what I wanted to see on the weekly. So that is very bearish. Okay, I would not want to I don't know what's going to happen in the future. You shouldn't either. We just don't know the future. And we got to honor that. We got to honor that we just don't know the future. So that's a good chart to keep in mind. I'm sharing that one. I don't have to post it in the channel because I'm sharing it with you here. So yeah, I'm keeping an eye on the S&P 500. Like I said, we get some type of a bloody sell-off because of what's happening geopolitically and where we are with this diamond pattern overbought area. And it reverts back to the mean. We couple that with a Michael Saylor Black Swan style event. Things could then get really bearish for Bitcoin as well if the ES starts rolling over. And these things and all these risk assets would just sell off. Maybe gold would be the only one maybe that would hold itself. Let's see gold and silver. I mean, even these guys are down. I mean, I sometimes cash is king right now. We're in the summer doldrums. We're going into a fourth quarter. We'll see. I mean, the week has got to turn over here, red over blue. Right now, blue is still over orange. I'm sorry, not orange. Not red, blue, orange. A little exhausted here. Got up pretty early here. And just like I said, I added that pink dotted line to represent the Ikimoku cloud on the weekly, staying above it, bull market, breaking and holding below it, bear market. And I'm using it, like I said, in much the same way of the meridian line of the Gaussian channel, which I just brought up for you guys here. Now we are in this meridian line of the Gaussian channel, right? The meridian line is the center fold. The bull markets take a very long time, 3 years. I'm sorry, 4 years. Bear markets do take about a year. We are a little over that now, but we are certainly not at a year yet. Inverse zero line rejects on the weekly are very, very useful in bear markets. They work very well. You have a very strong one forming. Like I said, it is Thursday. It is not Sunday night closing. But if it closes like it is today, that is a very bearish momentum reversal setup or a trend down continuation, however you want to look at it. Now, like I said, the breaking above this would confirm the that the golden, uh, sorry, that the bull market is back and the bear market is over. We don't want to wait for confirmation that high. We're not going to buy that high, but it's just, on our journey when we buy at the right level soon as we're approaching this level. When that happens, it'll just be like such a nice relief. We can be like, I'm going to hold this sucker. I feel so confident now. We have the golden cross on our side and so on. The golden cross, the breaking of the meridian line, the breaking of the pink Ichimoto cloud, these are very strong bullish bull market signs that the phase is shifted and the bear market is over. We are not there yet. We don't want to buy during that time. We are more sophisticated than that. We want to already have bought by then, and then to just realize like, hey, we can hold this for a lot longer. However, if you have not bought for then for some reason because your cash doesn't open up till then, that is also a late confirmation signal, and you will still get a great entry for a long-term run. Like I said, we might not be back at 124,000, the all-time highs, again until 2029. Just keep in mind about the journey that we're going to be going on together. If you stay with me during that time, like just relax. We're not going to be back up here anytime soon. Tom Lee, these guys that are saying we're going to be at $1 million by 2030, they're lying to you. Like, it's just impossible. We have to look at the facts in the chart. The facts in the chart did not say to keep holding when we got up here, that it was going to get to 250,000. That is absolutely ridiculous. The patterns repeat. We just got to measure how far we moved from the meridian line to the double top and move how far from the meridian line to the double top and realize dog leash style things snap back. Isn't that a more truthful way of looking at decision makings in real time than to bet on Tom Lee or whoever Hocus Pocus Moon Boy is saying what? Moon Boys are seeing every single dip all the time as a buying opportunity. They don't understand it's sell the rally, sell the rally. It's not buy the dip that keeps dipping. We have to switch our bias. That's what our system is all about. We want to be with the bias, but because it's multiple time frames, we can also, like, the bias might change on this time frame, but overall it's still down. Like, on the intermediate and short term, when we go down 30%, we make a double bottom near the 200, like that's when you could have a shift in your bias for like a couple weeks up. That's what I had to shift in I understood this intellectually, but it's hard for me sometimes to execute on it, but it just makes sense. But thinking in multiple time frames, that doesn't mean that you're holding it indefinitely, because the larger time frame pattern is still the big phase is still a bear market. That's why I kept telling you on this rally here that while this looks extreme, if you just look at from here to here, zoom out from here to here is much smaller than all this from here to here. We're in a downtrend. Rallies fail in downtrends. Every rally in a downtrending bear market is a shorting opportunity. So I'm right. And it's the same principle I just said earlier today when I was talking about how, while it wasn't an entry, that because we've had a day, see, this is the new day here, where we've went sideways for a couple hours and then broke down and kind of had an intraday bearish bias, sort of a down day, where the bias is down, that when we went up into the VWAP, that likely this down move would then use it as a pullback continuation for another leg down. I'm holding a runner. I don't care what happens. It would be not the craziest entry to add on, but you could short that with a stop sort of like above the Fibonacci ratio here. You don't really want to put it above the high of the day, but it's close enough where you could actually do that. You really could. I'm not going to do that. A little bit higher than 1.5% though. You could put it above the fib here, maybe. Then, if you want to short the high of the day, it'd be another trade there. Luckily, we don't have to take such aggressive trades on these lower time frames. We're zooming out a little bit. We took this trade. Much higher odds to take this trade. Very clean, because I had the time of day into the next day, into the early morning doldrums, where after trend days, you tend to go sideways. After trend days, you tend to go sideways. You had excellent trade location on both the horizontal, major resistance, and directional, strong resistance. We talked about when they intersect, it increases the odds for a tradable reaction. So I can go into all this stuff. Double top kind of a thing. Looking at beauty principle there, double top could break down. Like I said, I think this could hold here and we could go down to at least here, and then maybe it holds there, maybe it doesn't. I don't know. It's harder to make these predictions on these lower time frames. What's easier to predict is how major rallies might behave when we get to major resistance zones in bear markets. Conversely, when we're in established bull markets, right, the pullbacks then become the buying opportunities, especially when they hit this blue moving average, which is the 50. We're going to use these techniques that we're building and learning now every single day to really make a lot of money, right? We're not saying this in vain. Like I said, the blue is the buying in the bull. The yellow is the shorting or the selling in the bear. Even if we overshoot it, right, we still have this Ikimoku cloud, which has really been the king of this whole thing. Because look, perfect resistance, couldn't even get there, and we're probably not even going to get there. We're probably not even going to get to this yellow 20. If we do, I'm shorting. If we do, I'm shorting. I'm shorting every one of those because they have very high odds to work out. Just like in a bear market, if you go down 30% and you want to buy double bottom, you will get a nice counter trend rally that'll work out very quickly and you'll make a lot of money. Like, get those NLPs down so you can improve your game. That's what I'm doing. All right, folks. Let's see if anybody's on the call. I'm just kidding. I know no one's on the call. All right, guys, I'm out. Hopefully, you guys shadowed me the other day, or you shorted that yourself, or you're doing what you got to do. You're just remaining vigilant, and we will get the best trade location possible for amazing entries for all of us. Good luck, happy trading, and God bless.